Hey everyone, so I wanted to go through the RSI indicator today and show you 3 simple and easy trading methods that you can use in your charting so that you can enter and exit trades really easily, and so you can see exactly how and where this can be used to identify major trend changes in the market. Now, before we dive into the RSI, we need to get this up onto our screen on trading view. So the way that we do that is we click on indicators at the top, and in the search bar, we're going to type in RSI. And the first one that's going to come up is the relative strength index. We're going to click on that, and then you'll see the RSI pop up below. And if you actually double click on the lines on the RSI, you'll basically get 3 tabs at the top, which is input, style, and visibility. And the first thing that I want you to do is deselect the RSI based moving average, which is the second one. That'll get rid of that yellow line, which is essentially a moving average for the RSI, which we don't need. We just want to get a really clear picture of these overbought and oversold territories, which we're going to go into in a moment. So we've got our RSI indicator on our screen, and I do want to point out that when you are using this is that you are looking for reasons to enter long short positions or reasons to buy and sell. It's not necessarily when RSI is really high that you'll just sell it or you look to short the market, and vice versa when the RSI is very low. You're basically looking to use the RSI in confluence with your other indicators, and when you can merge the two together, like I mentioned earlier, you're going to start to get really consistent and profitable trading results. Now, the first thing that I want to show you is the overbought and oversold territories and how I use them. Now, normally people would consider anything above 70 overbought and anything below 30 oversold. That doesn't mean, like I said earlier, that if you just get to prices that are above 70 that you necessarily need to sell everything, and if everything goes down below into like that 30 region or below, that you need to buy everything. Okay, but what it does mean is it's telling you that we're moving standard deviations from the mean, and when you get to these very extreme levels of RSI, that's where I really take note. So I just eyeball this, okay, but you can change these parameters on the chart to make your overbought higher or lower levels, but the ones that I really pay attention to are typically 80 and 20, because when you start to get into the overbought 80, you're really going to start to find that price is really starting to get stretched in one direction, and then you typically do get a lot of reactions at that level. So I always look at 80 and 20, because when we start to get to like 20, it means that we've probably had like a very big crash, and it might be looking time to start to getting into longs. And when we get into 80 overbought, we're looking at maybe potentially starting to take profits, or maybe starting to potentially look for some shorting opportunities in the market. So I would set your alerts for an 80 or a 20. And like I said, start looking for reasons to enter positions at those levels. Now, in the same way that we look at horizontal support and resistance on a chart at price, we can do the same thing for RSI. And if we look left, we want to look for areas where price has had a reaction at that RSI level before, and if it has, then maybe we're looking for something similar to happen again. So if we take Bitcoin for an example over here, okay, I look for areas of value on the RSI chart, and we can see that basically whenever we get to this area of about 80 to about 85, right, we're probably looking at some sort of at least short-term top where we can expect some sort of larger correction. So you can see that every time we reach a lot of these peaks on the RSI, on Bitcoin, that we've had corrections of 35%, which is pretty sizable corrections for Bitcoin. If we again look at this crash that we got over here at about that 80 level, and then we've got our big crash that we got last year in May. So every time that we reach this level, okay, I'm looking for reasons. Okay, is there anything else in the charts that's telling me that we're either topping out or potentially moving lower here? So we can use the chart, in those upper regions to show us that where price may be coming to a standstill, but also I look at areas of value in the chart to show me you know, where I might want to be looking for buy entries. And if we look at Bitcoin again, is that we know historically that whenever we get to somewhere close to this oversold region on the weekly time frame, just using this as an example, okay, is, you know, that when we get to somewhere between about 35 and 30, that it's typically a very good buying opportunity. So this is why in the past, this year that I spoke about, if we do reach this oversold zone and territory over here on Bitcoin, then maybe that might be a very good you know, area to enter. And the reason for that is because every time that we've hit this area before, in the same way that when we hit those areas on the higher end of the chart, you know, that we're probably going to get some sort of reversal and trend changes in the market. Following on from that, I actually have a lot of non-negotiable areas in the chart that I will use to either you know, signal very clear buy entries and very clear sell entries into the market. And what I mean by that is that usually when prices reach very, very extreme levels of RSI in either direction, I will always look to buy that dip or sell that peak. So for example, if on Bitcoin we reach an RSI of like say 94 up here, or anything above, you know, 90, for me personally, these massive peaks, you can see that we get massive drawdowns over here and we get big corrections, okay, in the market. So that's always an area that I'm looking to non-negotiably sell at least part of my positions. And then the same on the flip side is that whenever BTC you know, goes to an RSI of, we can say here, you know, statistically that like below 20 on the RSI, it is always a very, very clear you know, buying opportunity, whether we're in a bull market or in a bear market, because we're always going to get some sort of reversion to the mean. So you can see over here back in November 2018, you might not have caught the exact low at that moment, but you know, we eventually basically had this massive run up, and that's what that RSI low led to. And you know, in March 2020, that was the COVID low, we also hit a massively low RSI of about 15, 16. So if that was to occur again, for me, that is an automatic buy. As we've made it to halfway through the video, please go ahead and drop me a like down below if you're getting some value from this video. And if you've got any comments or anything that you want to ask me, go ahead and write that down below. I try to get back to every comment to help you guys out. So yeah, so without further ado, let's crack on with the video. The second way to use RSI is to look for bullish and bearish divergences. And what that means is basically prices are making higher highs, like you can see that we got last year in May, but the RSI was basically making lower highs. And what this is telling us is that the strength of the move is likely weakening, and we can potentially look for a reversal in the price of the market. A quick tip for this that I use is that, as a little rule of thumb, is that when I see 3 peaks and 3 higher highs and I see that the RSI is getting weaker, okay, as we've just shown a moment ago, I look for, you know, that bearish entry on that potential, you know, third push up higher, because usually that is giving you that very, very last push before we get that momentum and reversal in price. And you can see that we got that very nicely last year. You can see that again, we got this right over here, you know, back in August 2021 last summer, where you can see that the trend of the RSI was basically moving lower, okay, but the price was getting higher. And if you actually dive into some of the lower time frames, again, you could see a peak just over here, you can see another one over here, and you can see that final peak here. And when we got that third one, massive correction to the downside. We did continue up higher, but that's what the RSI is going to help you identify, you know, using this as confluence and giving you extra reasons to look out for you know, that change in market direction. When we're looking for bullish divergences in the market, we're basically looking for the complete opposite. So the way that we can do this is, you know, we look for lower lows in price, as we saw here in last summer in May 2021, but on the RSI we're actually gaining strength and we're making higher lows, as seen over here. And what that is showing you is that the momentum of the selling is waning, and that's getting weaker, and likely that the bulls are starting to take control and price is likely going to start reversing to the upside. So you want to be looking for reasons to enter into long positions in that scenario. And as we said, you know, we can use this on multiple time frames. Okay, so I'm just going to dial this down to the hourly time frame at the moment and show you some nice examples, because when you see those triple divergences that I mentioned, like I said, if you see divergences 3 times happening, or you see these 3 peaks that are getting higher, or 3 lower lows in a row, and you see that the RSI is also diverging in that opposite direction, then you can probably take that as quite a high confidence trade. And I think if you look at examples like this, like I said, you can use this on any time frame. I'm just using the hourly time frame, but this is a really, really nice example of high probability trades. Okay, and you can see that here in January the 8th we got a low, we got another lower low over here, and then we got an even lower low on the 10th of January, and you can see that we're downtrending this way, but on the RSI we're getting these, this was the low over here, and we're getting these higher lows. So that's telling you that the selling is getting weaker, and then we can expect some sort of at least reversion to the mean, or a reversion to the mean, or a shift in price to the opposite direction, which is exactly what we got. And when I enter trades, as a general rule, so that you know roughly where a good take profit is, I think you should at least be aiming for, a 2-to-1 risk reward ratio. So you don't want to use like the hourly chart, for example, to, decipher the direction of, larger time frame charts like the dailies. For example, if you took a trade just over here, if you wanted to go for a 2-to-1, risk to reward ratio, then that would have worked out quite nicely. And, if you managed to enter somewhere in this vicinity over here, you could have had a stop loss of about, 2.5–3%. And then you can, like I said, if you aim for that 2-to-1 risk reward ratio, and you could have taken profit anywhere somewhere up in this region, and that's basically how I would use that triple divergence on the RSI. I don't typically tend to use double divergences, so when you see it twice, that does give me some alarm bells and gives me some food for thought. But like I said, if you see that 3 times where you get low, lower low, and you get that that low, higher low again on that RSI diverging, then you can take that as a very clear indicator to maybe enter some trades, and use the RSI to shift that market direction in the opposite direction. The third tip that I want to show you on the RSI is looking for grinding price action and seeing that divergence. Okay, that is going to give you extra confirmation that we're going to get a potential correction or a trend shift in the market. And what I mean by that is, a lot of the times, if you can have, trading is a little bit of a dark art, and you need to use a little bit of your experience sometimes to identify patterns in the market. But for example, if we look at July 2021, and we essentially got this massive impulse to the upside from 30,000, and we got to about 45,000 or so, and from there you can see that we started to grind our way up. And in this grinding phase, okay, that's where we typically start to get a lot of these divergences, and the trends start getting weaker. And when we basically break those sort of key trend lines, we start to get that, the real correction, and that starts to determine the next shift in the market. So you can see that at the top here. And again, what can you see over here is we got the massive impulse on Bitcoin in 2020, and then once we reached that 40,000 and got above here, you can see that we started to grind up quite correctively. And then once we broke that trend line, that's the one that sent us lower. So that's how I want you to try to use that. So like I said, when you get a lot of massive big impulses to the upside, okay, a lot of the times that's not the best time to be shorting the market, just because the RSI is really high. If you can find those grinding phases, okay, in the market, where you get an impulse and then we start to grind and chop in a certain direction, then you're typically going to start moving and reverting back to the mean. And you can see that on the opposite side of that over here, back in the summer of 2021, what did we get? We got the major impulse, and that did lead to some nice bottoming signals that we could have taken. But once we got this grinding action to the downside, okay, just like this, okay, and again, once we broke that sort of key trend line, then that was your indication to start looking for long entries. And like I said, we look for that bullish divergence over here, you know, towards the bottom of the market. And that's how you want to be using RSI, especially when you get those divergences on those corrective grinding phases of the market. It is important to note that, you know, as with any trading indicator, there are no certainties, and you are always just trying to put the probabilities in your favor. So try to use all of the stuff that we've talked about in this video, whether it's like trend lines, divergences, overbought, oversold areas, you know, in those extreme circumstances. If you can use that with, you know, all of the RSI indicators and tie them up, and then use those with, you know, some other indicators, for example, like moving averages, order blocks, and looking at volume and stuff like that, this is going to make you a much better trader, and you're going to win more often than you lose, which is really the most important thing. So I hope you got some value from this video, and if you did, go ahead and drop me a thumbs up and a like down below. Subscribe to the channel for more of these sort of videos and to keep up to date with all things crypto, Bitcoin, and trading. I'll catch you in the next video.